Hey, it's money talk, baby.
Here's so you can find the most active options that are trading that day so you can just follow the herd to make some money. You're going to go to barchart.com and then click options. Then you're going to want to click option volume leaders. Then you'll see this chart of all the most active options. Sort by volume. So for example, today you can see the most active option traded was an APA, the $14 call option expiring 807.
Here's something that they don't want you to know. When you have a pattern breakout, like this bull pennant here forming, the level that the bull pennant breaks out at is going to be a hidden level of support and resistance. So for Boeing this morning, this was at 177. When it pushed up, finally hit the top and pulled back, look at where it bounced at, 177. Using the trend change trend line method, you can identify a trend change with a break over this downward trend line, the bounce at support, higher volume, and that's going to confirm your move up.
Options is confusing, so let me break it down for you. So let's say I invest in spoons, and right now I know that $45 for one spoon is ridiculous. So I'm gonna expect the price of a spoon to go down. So week one, spoon costs $45. Instead of buying the spoon for $45, I'm gonna buy a contract that bets that the price of a spoon is gonna go down $5 in a month. Now the price of that contract cost me $100 right now because the price of the spoon is $45. Week two, the price of the spoon went down and the contract is more worthy because it's closer towards our strike price. Week three, the price of the spoon has moved down $5 and hit our strike price. Now each contract is worth $500 instead of $100. Now that's a $400 gain per contract. If you have three, that's $1,200 in your pocket. Just like that.
I've used the indicators and strategies in this course to turn $2.66 into $61.84 and $8 into $137 with the screenshots to prove it. I do a small trade every week just to prove that it's not about the amount of money, it's about the skill and strategy.
Stop paying full price for shares of stocks. If you're gonna buy 100 shares of Tesla, that's $69,000. However, if you're willing to wait 1 month, you can sell a cash secured put for around $5,000. So what this means is, it doesn't matter if Tesla goes up, down, left, right, doesn't matter where the stock price ends up. 1 month from now, you're gonna collect that $5,000 no matter what. So if Tesla goes down, your break even is $636. So that's $63,600 versus $69,000. That's a big discount for just waiting for 1 month. Follow me for more stock market guides and hacks.
Step 1, on understanding how to limit your risk and options and knowing how to increase that profit return. So anytime you guys do an option, I always look at the statistics and just simply look at delta, theta, and volume at least. Understand that every dollar that goes up or down on the share, 41 or whatever the delta is cents, will go into the contract up or down. Now, theta, every day, your contract is going to be taken from that. So 90 cents will be taken from your contract every day, depending upon how long you are out from it. And this changes, of course, over time. Volume is important too. This shows the amount of people that are within this. The more volume means the better chances of you executing your options, meaning getting in and getting out quickly. Lastly, I will say bid and ask is very important too. The thinner the spread, the better.
I was asked, how do you know which strike price to choose? Let me give you a brief explanation. Let's look at this option chain for Twitter, and we'll pick an expiration date of April the 16th. We're going to look on the left side, which represents the calls. The numbers down the middle are the strike prices. The strike prices above this line are in the money, and the prices below the line are out the money. The strike prices that are in the money will have a higher premium, but it's going to give you a greater profit. The strike prices below the line are out the money, and it's a lower premium, but it's going to give you a lower profit. You also want to consider the volume and the open interest when you're choosing a strike price. The volume and open interest will give you indications of how easy it will be to get in and out of the stock, as well as your profits. There's more to strike prices, but that's a brief explanation.
3 resources that I used and found helpful when I started with options. Number 1, In the Money. His 101 options video was the first thing I ever watched. Second, Options Profit Calculator. Enter any option and then see a schedule of what it can do. Third is the Robinhood app, super easy.
Okay, so search a stock. In this case, we can do NEO. Select trade options. Select a date at the top. We can do January 15th. You're gonna click select at the top, it doesn't show. In the money 40, buy, then switch to sell, do 41, then you'll see the total.
Where do I start with options? Here's one of the first trades I recommend. Find a stock that you're bullish on, meaning you think the stock price is gonna go up, and buy a call option instead of the stock. Remember, a call option gives us the right to buy shares at the strike price. No matter where the current stock price is trading, we can get it at the strike price. Suppose you really liked XYZ company and it's trading at $38 per share and you think it's going to go up to $45 per share. Well, you can go ahead and buy the shares right now at $38, risking $33,800, or you can buy a call option, maybe the 40 call at $1.30. Remember, the call option will allow us to buy shares at 40 no matter where it's trading, even if it's trading at 45.
Here's my favorite website for options traders called flowalgo.com. Basically, it shows you all of the flow, the options flow that's coming into the market. So you can see where these people with big money are, what they're buying. So in this case, you see the ticker, you see the dollar amount of how much they invested, the expiration date, strike price, call or put, and what was the actual price of that stock at the time they purchased this option, and how many contracts, what price of the contracts. And yeah, it's a great tool for options traders, and you could see kind of what the options flow is looking like, and that'll give you a general idea of what the market's up to for that day. So flowalgo.com, very worth it.
This is how I'm going to make $320 by selling a covered call on Apple. Like with any other trade, make sure you do your own due diligence and check your risk tolerance. Step 1, I'm going to go to Apple, which is trading at $126.32, and I'm going to click on trade. I'm then going to buy 100 shares and then click on trade option. I'm then going to go to the May 14th expiration date and choose sell and call. I'm going to select the $130 strike and sell it for $320. I'm then going to sell one contract and set my limit price to $3.20 or $320 for 100 shares. Then click on review and then submit. If by expiration Apple is below $130, I get to keep 100 shares and keep the $320 premium. If Apple is above $130, I get to still keep the premium and sell all of my shares for $130 each, giving me a capital gain. Remember that the risk of this trade is owning 100 shares of the underlying stock. If you want to learn more, you can check out my free webinar, link in bio.
This is how I make money trading options. Step 1, find a bullish setup. Next, go to your broker and pick an option that you like that expires in a couple of months. Once you have that buy order ready, go back to the option chain and pick an expiration that expires before the first one. Once you do that, find the exact same option that you're buying, and this time you want to short it. Now stick with me here. This creates something called a calendar spread. Let's take a look at it. You know you've done everything right so far when it says calendar. Now this is a $3 debit, which means the trade will cost me $300. Now when analyzing the trade here, you can see that my max profit is just below $1,000. Once you know your max profit, go back to your chart and create a mental stop loss. I'm going to use 270. Now go back to your P&L table and see how much you will lose if your stop loss hits. You can see here by the purple line that if it hits 270, my max loss is next to nothing. Oh, did I mention that time decay actually makes you money? I take profit when the share price hits my strike price so I don't get assigned. As long as the share price is above my break-even points, which are given by these red lines here, I make money. Now I have a potential trade with minimal loss and a lot of upside potential.
How to make money with pocket option. Add money to your account. The easiest way is to use Cash App and send 0.01 Bitcoin. It is a binary trading system. So when the stock goes up, make a call. When the stock goes down, make a put. Put. Call. Set a time duration. I often do 1 minute. Wait and collect your profits. If you are wrong, you will lose the money.
This is a quick lesson about one of our all-time favorite indicators to use for our group alerts when riding a trend for longer-term trades, about 15 minutes or more. These three lines you see are called the alligator indicator. I'll explain it the boring way first. It's a collection of three moving averages, the 5, the 8, and the 13. When the lines are together, like here, the asset has not defined a trend yet. When they are apart, like here, the asset has defined a trend. In scientific terms, when the lines are together, the alligator is asleep, like right here. So you're fine, you're chilling, there's no need to run and place any trades. But when the lines are apart, the alligator's awake and you must grab all your belongings and loved ones and run like hell. And by run like hell, I mean place a trade in the amount of your monthly rent payment. Just kidding, don't do that. Unless you can afford it. Anyway, hit the link in the bio for our private alerts.
Stop right there. I found the perfect way to explain pocket options, so stay tuned. Watch this. Okay, so boom, when you first open up the pocket options screen, this is what it looks like. And you want to first select what it is that you want to trade. So we got currencies, commodities, stocks. I'm personally going to be trading the currency, which is AUD CAD. Make sure you're selecting things 80% and above. Okay, and so then when you get that selected, you're going to want to go ahead and determine how you want your trade to go. Me personally, I like trading for 2 minutes, so I'm going to set my timer for 2 minutes, and I just adjust, like, the time is pretty self-explanatory. And then the same thing goes for the money amount. I'm trading with $10, so I'm going to go ahead and increase this amount to $10. You can either manually type it in or press it. Then you could go ahead and decide whether you want to sell or buy this currency. Be very careful, make sure you have a strategy going into doing this. Sell is red, buy is green.
So if you're interested in learning how to trade, I suggest that you try out Pocket Options. They give you a free demo account with $1,000 in it, and that way you can sharpen your skills before you start investing real money.
$5 contract and made $106. Link in bio.
These my dollars make it hurt.